What's up, guys? What's going on? How are you all doing? Morning, Tickle. Morning, Kevin. Hope you're well. It's funny you say that, Kevin, actually, because one of our members, Andre, who is one of our long-term members, has actually sold it, I believe, from. Let me see. I can't remember exactly. From the simplified Wyckoff scenario that happened. Let's go to oil. This move here. So remember, the simplified Wyckoff scenario is simply institutional trajectory across lows, breakdown of the structural point, which opens up your sell side window. Then you sell from here using the high as your protection, and you sell it through. So yeah, really simple setup. But they did actually post that in the Discord here. I'll show you. Right here. So remember, if you sold it, or you're watching this and you're thinking, I took a trade like that, show us the trade. Jump in the Discord and show us. Love to see it. Morning, how are you doing? Akram, hope you're well. We are using a different headset today because we're streaming from home. Let me get this. I'll post this into here for you. So you guys will see this in a couple seconds. Right here, we don't have multiple displays today. So this is the setup here from Andre. So really, really nice move. You can see again, simplified Wyckoff. Breakdown of the structure, giving you a window. He sold from around the 50% of the last up move for the downshift. Really clean. Really, really simplistic, really clean. And that's what the basis that we gave yesterday, saying that using the simplified bias, we can see our targets would be short-term low, long-term low. These are our two targets. These are the 3 points or 4 points that we wanted to sell from if price got back into these areas. We sell down to the lows. Unfortunately for pushing back, it didn't happen. But that's fine. There's plenty of other ways you can negotiate around selling through that. So longer term target is this low here, which is, to be exact, 65,536. So if there is another entry, let's say, given around here, plenty of meat on the bone to sell through to the lows. We were also saying to you guys about Euro. So remember here, took out the previous high. We had this daily low and this daily low. We said that generally, if we're running highs, we will consistently take those highs. We'll expect those highs to consistently be taken. Now, in the scenario of a pullback, which is what we're in at the moment, we're looking for relative points of high liquidity for price action to transfer the wealth from one side to the other. Remember that liquidity is transferred from good positions to bad positions, or from high liquid holders to low liquid holders, and it's simply just how it works. What is this? Learn how to customize the bot. Okay, let me turn that bot off. I don't know why that's running. One second, guys. Chatbot. Just turn this off for now. Interesting one. So our goal today, guys, is 20 likes. If we can get 20 likes, we'll be happy with that. Okie dokie, right. So if we get down to here, we're only looking at this as a pullback. Now we go down to the 15-minute, you'll see we had the same scenario here. So we had the institutional involvement to the downside, very clearly present. Got to mute a couple of things. I've got some alerts going off in the background. So we had the institutional involvement clearly heading down. Again, another space created. So if we close outside of that and it begins to show us that there's potential for price action to deliver higher, we can then use that to confirm. Oh, that's new. We can use that to confirm that the liquidity is being transferred from one previous point of liquidity to the left to a new point of liquidity on the right, ultimately following the institutional demand and the institutional supply. Now, you could just say, oh, it's just imbalance gaps in the market, or it's just fair value gaps in the market. But think about the core principles. And again, we really reinforce this in our latest videos. If you haven't watched them already, head over to the Pip Surfing Society homepage and check out the Keep It Simple series. If you do watch it and you enjoy it, comment and a like goes a million miles. We appreciate it. But we really reinforce that and explain to you guys that so many people lose the basic concept of what is it you're trying to do in the market, where you're trying to define a directional move. That's what you're trying to do, whether you're doing it on the 1 minute, 5 minute, 10 minute, hourly, monthly, daily. It doesn't matter. The time frame is irrelevant. It's always the same. It's a data driven statistical move that you are looking to follow and capitalize on. So if we have big institutional movements, they cause imbalances, they cause spaces within the market. Only large institutional in and out moves can cause these spaces. Now, of course, you do have the potential for, let's say, a fundamental move or something that causes a space to open that is not necessarily just a direct order flow movement. This is correct, but 95% of the time, it's still going to need that institutional involvement to be able to create these spaces and give you that substantial move. Now, excuse me, understanding this basis means simply following the true gaps within the market, or the established points where liquidity is clearly present, and then waiting for price action to reinforce that with a visible sign gives us a lot more probability in terms of following what price action is actually looking to do, rather than hunting structural moves. Because remember that structure is created by institute, but it is not dictated by structure. It's a side effect. But the only difference is following spaces within the market is going to give you a lot more of a head start, because 99% of the time an imbalance or a space is created before structure is ever broken or made. So it keeps you ahead of the curve. Look at everything that you see on the chart as an indicator. And what the indicators do, they lag. So you want to have something that is as close to the true movement as possible. So part 5, by the way, of the Keep It Simple series is coming out this week. We plan to get that out tomorrow. Let's see. Question: do you consider a new day open price or gap as reference for the following order flow? No. No is the answer to that one. So for any of you that are long-term followers or long-term viewers of the channel, that have followed me from the very beginning, then you'll know that I've taken I'd say I've taken a fair few changes in terms of the core principles that I've decided to follow and use at a given time, and I've always had my reasons for that. Now, the reason that I'm using the principles that I'm showing you guys now is because, for any of you that don't know, I have a 4-month-old baby, so keeping time on charts to a minimum is kind of key. Of course, it's never going to be zero. That's sort of implausible. But what I've done is taken the basic understanding of core order flow and principles of institutional movement and broken it down into 3 core factors. What is the daily space telling you? Okay. What is the daily space telling you? Because that is the indicator for daily order flow. What is the hourly space telling you? And then what is your minutes telling you? Now, whether you use daily, hourly, minutes is completely down to you. But the principle of it is, if we have a key movement to the upside here, so this is the key movement. Why is this key? Because it locks in the direction. Okay, so when we have this space, price action is more likely to go bullish even if it's moving down. Okay, then we go to the hourly, and this goes from the liquidity transfer. The daily transfer orders go to the hourly, so whether you go 4 hour or you go hourly, it's irrelevant. It's based off of what you prefer. So what you're going to be doing is you're going to be looking for daily gap. Okay, bullish, cool. Again, this is pretty easy because it's gold, but daily gap, bullish. Okay, great. We're just going to rewind back to like here, so when that space was created. Then we're going to go down to the hourly, and we're going to look at that gap has been created, so we know it's here, it's around this area. Where is the liquid from this space? Like, where have the orders come in? Where are they sitting? Remember, if we're going up, orders sit under lows. So we can see that there's a low right here. Now you can look at order blocks if you want to look at order blocks. You can look at fair value gaps within this if you want. But then you start adding in so many factors that it removes that simplicity. We're trying to keep this as simple as possible, to keep it as least time consuming as possible. So from here, we're just looking at the low. Okay, so I have this low marked and this low marked. If it decides to run up, put in a new low, we can start looking at that. But the idea is there needs to be a transfer of liquidity, and if liquidity sits at these lows, we need to transfer it from the lows into the highs. All right, which means price coming to these points and going higher. Now, the time of day that this happens is irrelevant. The pair that you use this on is irrelevant. The overall movement on a given day is irrelevant. The only thing that we need to look at is what direction is the momentum of market moving in? What direction, or sorry, not what direction, but what areas on the hourly represent this in terms of a good base for your orders to be sitting? And then the minutes need to confirm this if you're using daily hourly minutes for bias, area of interest, and confirmation. That's what it goes. So daily is your bias, hourly is your area of interest or your points of interest, and then your minutes is your confirmation of those points of interest. So it's a very, very simple. Okay, so we're just going to play this, and you can see that we put in this space after pushing high, so we put in a new high from there. Okay, there to there's new high. So we can look at this for reference. Now, when we go back down to like the 15, if you look at what we do here, remember what I was telling you guys earlier? So where is the institutional order flow going when we get down into here? Well, going down. You can see that. This is the last space present. So if we manage to push up and close above this, that tells us that the orders that push price down have most likely been removed, and the probability is price going to go up from here. So let's just see what it does. Nothing, continues going down. So we say, cool, whatever, we're not bothered. Daily bias hasn't changed, it's still the same. Hourly points of interest are still the same, so we're just letting it play. Okay, so remember, we're still looking for longs, so we're back at where we are. We're back at present price action here. Now, that is the low point. The amount of people selling this before price started pushing up would have been tremendous. Now, what happens is, and I said this yesterday, I believe that price action was lingering around in these areas, allowing people to fill this area with stop losses. Now, I wanted this to come lower so I could then capitalize on the close out above here and price action playing out of there. Didn't give it to me. Oh well, we move on, right? It's exactly the same thing. Now, if we look on the 4 hour, notice how we don't really have many points of interest. We only have here, here, and the high. Now, the relevance of each high and low is going to be defined by your bias. So these are only relevant for targeting. We're not going to be looking at these for price selling away. Now, you can, if you like to counter trade, use that as a basis, but it's kind of stupid, right? You're kind of trading against institute, so you don't want that. So when you have highs or points of interest against your daily bias, so highs, your daily bias here, you just use those as targets. And only if this changes would you begin to use these as a different reference point. But there's only two reference points, either points of interest or points that you would consider selling or buying to or from. So it's very, very simple. It's keeping everything that you understand with structure, order flow, everything that there is, but keeping it in a simple 3-step understanding. Is there a daily bias? Yes. What direction is it traveling in? Up or down? Is there points of relevance on the hourly? Yes. What are they to us? Are they relevant for targets or relevance for points of interest? And then, is the minutes confirming price action actually delivering that? Yes or no? Very simple. So just going to have a look. This is a 4 hour, so this was something I gave out to the VIPs. And again, the relevance is exactly the same here. Notice something. Notice how we created a gap, create a gap, create a gap. Our bias did not change. Why not? Because we only created bearish gaps. No bullish gaps were created in here. Yeah, we might have taken a couple of sells with confirmation and it might not have worked. Just so you know, we didn't. I was away in Kuwait the whole time this was moving up. But we tapped into this daily area, which is a point of interest because it sits... actually, you'll have to watch the Keep It Simple series to understand why this is a point of interest. Head over to that and watch it. They're really short videos, as you know. They're not like 3 hours each. They're like 8 minutes each. So head over there and watch those. But we hit this point of interest and then we played lower beautifully down into the low. Now, if we go down to the 4 hour, you'll notice that we hit this low. Okay, and price action just wicks it. Now, when you rewind this, go to the 15. Okay, watch this. Now this is counter, so it doesn't hold the same relevance, but it's for a teaching purpose only. I've always said this. Anything I show you on rewind, anything I show you that I'm already in, anything like that is not for me to be like shoving a trade in your face. It's to understand the principle of what you should be looking at if it delivers to you in real time. So that's the high area of the last gap that caused that push down into the low. If we're lucky enough to close out above it, so at the moment we haven't. Now we have. Now, based off of this, you can either go straight off the 15, which would give you an order of entry here, stop below the low, and then you begin to target highs accordingly. Now, as I stated earlier, we'll just go to here actually, this is a completely counter directional bias trade, so you wouldn't necessarily be looking at this, but like I said, just go along with what I'm showing you here, because it's not based off of I'm not trying to say this is a valid trade you could have taken, I'm showing you the principles. And you can, at this point, if you're using a slightly higher time frame, so like 15, you can go down to a 5 or a 1, and you can define a point of liquidity within here. So for example, this low, right? If you come down and take out this low, and then you have the same principle, you can trade off of a smaller time frame bias understanding. But we'll go to the 15-minute just for now. We don't want to go too crazy in depth. This isn't even a valid bias trade. So notice how we didn't get tapped in, and the run starts to go really nice, and it hits that short-term target, but it doesn't hit our entry point. So the validity of it is not the same. Keep that in mind. Go to the 4-hour now. Notice how the only point we had was here. That's the only point that we have to reference off, unless we come all the way up to this high. So at the moment, there's not really a huge amount to trade on this, but that's fine. We just keep yourself seated. That's why we have multiple pairs, and they're labeled as liquid only, because we're only trading based off of liquid transfers from one side to the other. Like I said before, structure and all of that kind of stuff that you follow is great, and I'm not saying that it works in one way better than the other, but if you look at it, 90% of the time you will see the transfer of liquidity and the major order flow will come in before the structure is formed. Not all the time, but a lot of the time. And I've said this before as well. Take this and apply it to what you already know, or use this on its own if you really understand the core concept of it, which is so simple. We've always done this same thing. We like to keep everything simple for you guys. That's how we've always traded. It's how we always will trade. Simplicity will always be king. So we come back down to the 15. Here, notice what happens. We take this, so what would we be looking for? We'd be looking for a closeout below this. No closeout below it. Price continues going higher. If we closed out below there, we could have looked to take a short. Now the reason why I'd be a bit dubious of that is because we haven't really done anything. This high is only the high that was created at market open on Sunday. So it's not like a major liquid high, you know, it's not like a confirmed point of structure and it holds value for us. It's a very short-term point of liquidity. But a beautiful run out of there. Beautiful. We're looking for the same thing here. Get pushed down into these lows. We can look at the same. GU has just tapped into this. Let's have a look here. So notice the high is there, so we're way off. Way off. Excuse me. Gold, same principle, not a huge amount. Did we look at NAS 100 yesterday? We did. Our bias is actually to go short, I believe. No, I'm lying. It's long. Why did I think it was short? That's stupid. So we had one long position potential from here, and then another one from here. This one didn't get reached, and you could look at it and say, oh, you could use this order block here. That's cool, but you could also look at this and say you could use support and resistance. You could also look at this and say you could use, you know, some sort of ICT malarkey. You could always look at this and say you could use a, let's say, I don't know, a break of a trend line. You know, you can look at it in many ways, but it's all about keeping the workload minimal to you. What's going on, Andre? Hope you're doing well. Covered your oil trade setup this morning. So good job on that one. Okay, so we showed the setup here for the 15-minute. Excuse me. Apologies, guys. This setup here is the setup from yesterday's live stream. Only delivered to this high, which was 1 to 3.3. But look what we did. We swept the major low that we highlighted on the 4-hour time frame. We had a 15-minute gap here. Price closed out above that, telling us that the relevance of that low and the higher time frame bias have aligned. Therefore, a long out of here is more probable. Of course, you could aim for highs, and we do actually get to that high in the end, but it aligns with our bias. It aligns with what we want. And then the same thing here. If we'd have had this run down into here, you would have looked at this space for price action to go long out of here. Now, as I stated before, there is potential on 90% of these for a refinement, and you can see that refinement right there. So you see the closeout above, then you locate a liquid low. When you sweep it, if you close out above that high, then you of course can trade out of that. But because you're higher reward, it's higher risk, and you have a risk of price not tagging you into the position, and you also have a risk of price action, how would I say, taking you out, or only running partial when this position, if I put that back, this position runs a lot higher, even returns and gives you the opportunity to get out again, when your short-term position would have just got blasted if you left that in there. Obviously, you know, you're running all the way up into the you're running up into double digits in terms of RR. You'd be ridiculous to try and hold that back to the low. In terms of the refinement, it could be used more of an idea that we get in and out at smaller targets and less probable targets. More probable targets than holding for longer periods. But it's done in the same way, so it's not. There's no confusing aspects. It's all the same. You don't have to worry about tracking candles. You don't have to worry about doing anything except for finding highs or lows and a gap on the daily time frame. Bias up, cool. 4 hour, where are our lows? Is there anything major going on here where we have a low that didn't get taken, which sort of just makes that high liquid? Oh, what am I doing? What's going on? Then we also took out this. Again, that's targeting. That's not points of relevance. We have this low in place. Doesn't hold much value for us yet because this candle could come down and invalidate this as being a low. And that was target. That's a target too. So we have two targets: longer term, short term, and then like a daily target. So ultimately, if you tap into here or here, you can trade to this point, or you can trade to this point, or you can trade to this point. So it's varying levels of how long you want to hold the trade for, what your bias is, and why you're expecting it to go to certain areas. Oil is returning now slightly higher. Let's see. Now, notice something. Where did it reverse from? Well, it reversed after it took out the liquidity, which was one of our targets. Let's go down to the 15. Wouldn't really be too relevant for us. It's come pretty low. But the same principle, if you find the last move that took us
institutionally down into here, you close above. So anything after that closeout is probable to come to the high if your bias is bullish. Now, our bias is actually bearish on this. So now remember, oil is probably being fundamentally driven right now. So it's not something that you can just expect it to, run immediately and go to the points that you're looking at. There's always a probability that fundamentals will overrule what it is that you're sort of the key principles you're following. This is why, what's the main thing that we're looking out for on a daily basis? Not to be chopped up by red folder news. Simple as that. Don't get chopped by red folder. A very basic understanding that a lot of you already have. Just avoid it. Don't try and trade it, just avoid it. Okay, 16 viewers. What's going on? First time I've looked at the live stream stats for a second there. So if you are all new viewers, then hit the subscribe button. If you're already a subscriber, then a little thumbs up would be amazing. Our like goal of today's stream is 20, so another 15 and we're good to go. Today's is not going to be the longest stream in the world, just so you all know. We are going to be keeping it relatively short, but again, you guys have all the stuff you need in this live stream, in the content that we've posted over the last couple of weeks. If you want to keep trading sort of as a collective alongside myself and other members, the Discord link is down below. We live stream in there almost every day as well. And also, if you love the gains from trading but you don't really like trading yourself, you can check out our hands-free partners. And essentially what they are is they are a Forex algorithm investing company with over 10 years of backtesting track record that you can invest in and just receive profits. They don't charge you for their services. The only thing they do is take a small amount of your profit when they make it. So if they don't make profit, you don't pay anything. Simple as that. And you never see your account balance go down because they only take the money that they make. If you want to check them out, link is down below for them. Nesab Investment, based in Kuwait City. Actually spent the last week out there with them. So more videos to come based off of that trip and all of the stuff I learnt, the way that they trade, the principles that they use as an institutional heavyweight. Totally different environment to what it is like here in the live trading floor and within the Discord, totally different environment. Is there Keep It Simple Part 5? Yes, there is. That's coming this week, Andre. Plan to get that out today. Sorry, not today, tomorrow. Yeah, plan to get that out tomorrow. So yeah, that's coming, don't worry. This is a complete mess. So notice how we were targeting highs here. High, high, boom. Bearish move came in, so instead of this being a point of interest, we become a target. And look what happens. We hit that target, right? So we'd still look for this to be running bearish targets. The longer term target is this low. But we are consolidating quite heavily, so at the moment, don't expect any expansions. See what we've got in the hourly here. I haven't actually looked on the hourly. Nah, nothing. Not interested. Not interested. Well, we do have this that we could interact with, but I doubt. We could actually delete a lot of this stuff. think this was before. Yeah, so notice this, right? At this time, we were only bearish, so bearish, bearish, bearish. And we wanted price to target this, yeah? So we go down to the 4 hour, and we have here, that would be a point where we're past that already. We have here as well. Now, I'm just going to delete that stuff in there because it's all lower time frame stuff. So from this point, we're still looking for bearishness. Until we shift on the daily, we're only looking for bearish. So you can actually split screen this, it might be easier. Daily. Doesn't rewind. That's great. But we can see when it does create the space. So it doesn't create until it runs through this high here. So we're just going to fast forward this. Right there. So we go to the 15-minute. Look what we do. Institutional gap here. We'd look for that space to close. Nothing. Cool. Ignore it. On to the next one. Where are we now? What's the time on this one? This is 10 PM on the 18th. Okay, so it's tomorrow the gap opens and then Friday it closes. Okay, so we're looking for the same thing. Blast through again. So 15-minute gap did not get closed out below. Ignore it again. Notice how we're just whatever. Unless price gives us what we want, we just don't even care. Irrelevant. Literally irrelevant. Okay, so let's just confirm this on the daily here. We're not interested in that. That's not relevant. So there isn't much else in there. We could highlight some areas of interest, but at the moment we're not. We're not doing that. So in here, we're just looking for price action to either deliver into this space above that we have highlighted, or to change our bias. Now we know when we fast forward this, at this point, our bias changes. So even though we're coming into here, our bias now has changed. So we'd be looking for this low to be contacted and this to be our target. Simple. Just change. Can flip everything on its head. Okay, so do we get down into the lows? No, we hit the target high. Cool. That's great. Whatever. And again, that's the basis of why is it important to follow the principle that's shown right in front of your face, because it's so simple that the tracking becomes almost foolproof. Like, it's almost impossible to not be consistently following it, because the bias is always given to you by one simple factor, which is always going to be the daily space. All right, that's all it is. Nothing more, nothing less. Now from this point, we've created a gap again. We can just wipe off all of the rest of the shit. It's literally irrelevant. Get rid of it. No one cares. Oh, Ray. No, we don't want Ray. High, low. Okay, short-term target, long-term target. Get rid of this. Don't need this. There is actually a point of interest that it's just tapped into, and again, if you want to understand why that's a point of interest, yes, it is an order block, but not using this system. It's a different principle. Follow the Keep It Simple series. 1 to 4 is already out. Go and check that out. Short videos, no no 6-hour lecture. It's nice and chop and short. So from here, we're just looking for a bearish move lower. So in this area, we did change, but I don't know if we had an entry given. I would say that we probably didn't. No, we did change direction after this and after this. But the relevance is not there. Why? Because this point of interest doesn't hold any areas of liquidity for us. Having this area as a whole, so this space, is great, but it's such a vast area that you could pick up 1, 2, 3, 4, 5 losing moves before the price action actually delivers, if it's going to. That's why it's easier to pinpoint a concentrated point of liquidity, like a high or low, because it gives you a lot less discretional basis with that. It's a singular point in price. It's not an area. As soon as you add probability to an area, unless that area is tiny, it becomes a lot less probable to actually play out. That's why you won't really see many areas highlighted on my charts anymore. It's more levels. Can you take a look at oil? Sure thing, buddy. Let's see. Yes, so oil itself is still moving great. So just before we go into this, Andre, I'm just going to show everybody a very simple principle as to why we use the daily time frame as our bias. I'll start from over here. Okay, very, very simple. We open a bullish gap here. After that gap is confirmed, so here, price action is bullish for 1, 2, 3, 4, 5, 6 days before it starts pulling back. We open up a gap here, we look for bearishness, price goes bearish for 1 day, then it pulls back. We open a space, because remember at this point we're looking for reactions and it wouldn't be giving us reactions. We open a space, it goes bullish for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'm going to say that's over a month. It's a couple of months, right? So just using that one bias principle, you would have been correct here for 1 day. Then you may have taken, let's say you took 2 trades on each day and you lose. After this bias is confirmed, if you take a bullish setup on here, the probability of that running higher and higher and higher becomes vastly higher. Not to mention, from this point, you were correct for over a week in your bias. Follow it higher. Oh. Note that the gap is created here. The first gap is created here, so that's the 9th of February. And then we go bullish and continue bullish until here, which is the 18th of April. From here, you're looking for bearishness. Now, we do have a bullish gap, and price goes bullish for 2 days. This is a large time frame. So even if you take 2 or 3 days of being incorrect in your bias, the probability of the setups delivering in that direction become a hugely amount, less. It's a lot less. When you see these gaps open, chances of price action following that for a given, a longer period of time is so much higher. I mean, like here, bearish, 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 till we get a gap here. But remember, a lot of time, some of these gaps are going to be fundamentally driven gaps. They're not always going to be true price action. But that's just a quick overview of oil. And oil has been so fundamentally driven. Well, it is a lot of the time. But look what we have. So we have a bearish gap here, 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 here. So we're looking for lows to be ran here and here. We've already ran the first one. We're starting to react. Now, based off of that principle, come down to the lower time frame. And what is price looking to do? Well, it's probably looking to reallocate some orders. Now, something that is so obvious with this chart is that we were super sluggish across these highs. Then we've taken the structural highs right here and we've broken down. Okay? From that breakdown point, it's consistently broke lower, 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 and it's making spaces. This tells us that there is a relatively large amount of interest to sell this price action lower. Coming down to the lower time frame, notice how we took out the low and we've automatically started rallying back to the upside. Now, we can look on the lower time frame here. Actually, let's go back to the hourly. What would we be looking at here? Let's say we didn't take any trades, like I didn't personally. What would we be looking at? Well, we're looking at the 4 hour to start, and we can see that we have 1, 2 points here that could give us relevance. If price action decides it wants to pull back high enough, here we would look to sell away, here we would look to sell away, here we would look to sell away as well, if it's going to maintain the daily bias. and if it's going to pull back enough for this. Now, because of the war in the Middle East, there is a probability that price action could just be choppy for the next couple of days, or sorry, that they're expecting there to be a war. We could see price action being choppy the next few days. Now, keeping the principle in mind that not all fundamental elements are going to dictate directional bias, we're still looking for price action to run lower. Yeah, so let's go down to the 15. What time of the day is this? 3 a.m., 2 a.m. We have market close here. So we have market close taken out by that high. So I would personally say, if we do not react here, so if we come up to here, if we get here, and we don't react at this point enough to drive lower, then we're coming up to these highs. That's what I would say straight away. The reason for that is because this is the main collective of liquidity for the latest session. So this being removed from the market, which it could have been, will allow the gates to open up for higher pricing. Now, again, remembering what I just said earlier, if we're seeing lower pricing as our bias, lower pricing is the preferable direction for Institute in terms of fundamentally trading this. Lower pricing is going to open up the gates for higher bidding and higher pricing. So my bias is short. I would expect this still to go short, but whether we're actually going to see pricing come down, what is going on? 1 second, my PC's. Yeah. Whether we're going to see pricing come down is going to be defined by if we are able to push up into these highs. If we're able to push up into these highs, then we know that there is a lot of orders being bought up from these lows. If we do not sell away from this point, we're coming up to here. Simple as that. Simple as that. So I would say that the last call for shorts will be around this area. But remember, everything I say is based off of the principle that I'm looking to follow and the understanding of what I've already taught you guys and what I'm showing you. So, we could just come into no man's land here and sell away. But for me, this is going to be the key point. If we get up to here and we sell away, great, expect this low to be ran. If we don't, highs become targets. But it doesn't mean that we long it. That's not what it means. We're still bearish on the bias here. This is a point of interest as well. I believe that's around the 50 too, right? Yeah, that's straight into the 50. Okay. So let's see if we can get we're going to go back to Euro. So GU, we took out this low. We'll see if we get a buy up here. It looks like we are seeing something. Nothing right now though. Till we close out above that, doesn't hold the relevance for us. So we'll just set an alert and let it do its thing. Okay, so we're pushing up now. 5 minutes left on that candle. Yeah, it didn't close out, so I don't know where that's gone off. That's good though. So for any viewers that do look into our hands-free partners, when you refer or when you go to arrange a call, because you'll have to speak with them, just use the reference Ross and they will know where you've come from. Let's see how many likes we can get right now. I see you guys watching. Where's the link? It should be in the description. It's not. I'll send you a link, 1 second. I'll get a link in the chat. Yeah, okay, let me change that. Let me change it. There we go. Okay, so okay, let's see if that will work. So hands-free is based on algo trading. So the hands-free is pretty much an investment company that uses an algorithm to trade. So they don't. So what I say by hands-free is all you do is invest in. So you put money into the company and they just pay you every month. They just pay you every month and you can withdraw at any time. There's no obligation for long-term investment. You're not contractually binded to, keep your investment in there. You can take as much of it as you like and they just pay you on a profit split basis. You wouldn't be able to use it with like funded accounts or anything like that. They only take fund deposits. Because it's a relatively large firm, I'm not sure what the minimum basis is for global investments. I know that the Kuwaiti side of things, it's 5,000 KD, which is, I think, 15,000 US dollar. But again, inquire and talk. If it's something that's on your radar, something that you'd be interested in, it's always worth that conversation, because I'm still excuse me, I'm still working the basis with them, because I want to be able to give you guys a, how would I say, like an offer deal, if you were. Like if you sign up through me, for example, then you will be able to deposit less or something along those lines, wherever it may be, or deposit more, I don't know, wherever, but yeah, you can always message me and ask me. That's fine. I have direct contact with this company, so it's it should be in the description now, right? Let's see. Don't know if that's a link. Let's see. Let's get this. Copy link. It's okay. 1 second. There we go. What? Okay, there we go. There's the link. There's the link. So it's the pinned message. Put it as a pinned message. Interesting concept. Yeah. I can show you guys some of the back tests on GU. Let's just see what we're looking at here quickly before. So nothing here. I'm going to bring this down into this area because we're going to need it down here. Gold still running high, that's what we thought. Nasdaq still running higher as well. U-Chef, we haven't even really looked at that properly. Oil. Okay, so still playing around in this area here at the moment. I am going to put an alert for around here. So let's just do a complete let's do a completely start to finish markup on AU. So bias long, bush straight away. Bias long, short term target, long term target. We don't have because long term target would be up here, but that's way up there. We want to keep it relative to the price action that's delivering at the moment. Excuse me. Okay, 4 hour low is being hit right now. Next low is here. What do we need to open up a space? We're going to have to do some serious moving to open up a space down. So simple as this. Target, point of interest, point of interest. We would trade away from here to these points. Close out above that. We can begin to validate. Let's see. Simple as that. Notice how that took me 30 seconds. 30 seconds. To analyze a market top to bottom. Simple as that. Let's see. We've got 11 minutes left on this, so we've got a little while left. Oh, actually, that changes now to here because there is no space there anymore. Notice how there's no fair value gap now. There's no imbalance there now. So we change that. So I am wrapping this stream up in about 15 minutes. So if you have any questions, now is the time to ask them. If you want to ask any questions about anything in terms of what we're looking at, our partners, the Discord, YouTube channel, whatever you want, now's the time to do it. Remember as well, if you do like this stream or you have liked this stream, then share it with some friends. Share it with your friends. We appreciate it. Okay, so this still stands. I'm actually going to change this to per bar blows rather than, yeah. Let's go back to here. So So buyer still bearish. 4 hour, we have nothing right now. GU, we have nothing also. You can go to the hourly and still. Same principle here. We're still looking for this to sell off. We gave that sell off bias yesterday. Final thoughts on gold. Where are you seeing EU going? Okay, we'll walk you through both of those. Okay, final thoughts on gold. Our bias is long on gold. We have liquid lows here. Honestly, my thoughts on gold are that I think we're going straight up. Unless we have a fundamental move come in and it gives us a drive down into the lows. So we have this afternoon, we have the S&P Global Manufacturing, the SMI Manufacturing, and the Job Jolts, or Jolts Jobs. So we either put in a new 4 hour low or a 1 hour low in this area, and then we come down, take that out, and we run higher, or we just run higher, or we play down into the previously created low. Bias though is long. Target high. Expected to make a new all-time high is what I would say. That's what I'm looking at. That's what I'm expecting. So real simple. You know, there's nothing really crazy for the biasing on it. It's clearly bullish. We're creating lots of liquidity across these highs. Yeah. Trade from here, or any new lows that are formed, and target this, and this. Euro. Euro, I'm looking at these 2 points, Andre, to then travel up within there. So I've got those set. I will update the Discord, so if you see it, you'll see it in Discord. Final thoughts on gold. And do you think DXY will break 100? Thank you for the stream watch. That's pretty good. Of course, no problem at all. DXY. Oh, it's been a while since I've looked in here. The only thing I use DXY for are the reports for NISAB investment. I do key fundamental reports for them using the basis of outcomes on news events. This stands for greater than, and this is less than. So if a report comes out at greater than or less than. Do I think it will break 100? It's breaking 100 right now, I believe. Let's see. Do you think DXY will break 100? Yes. Yes, I believe that it will break 100. But, it's a big but. I believe it will break the 100 level, because the 100 level is... Oh, you mean break 100 as in go down? My mistake. I thought you meant break 100 as in go up. Fundamentals today are going to define what we're seeing. So let me just scooch this out of the way quickly. Daily down, 4 hour. That's a major high. That was point of liquidity. That wasn't really, but it was still a high. And here. So down to the 15. No institutional involvement up to that. Institutional involvement, but no break below. So I would look for this high, because I reckon what we might see is something like this. Yeah, which again would side with our bias that Euro will go higher, GU will go higher, and gold will go higher. And USHF will go lower. It aligns with our biases perfectly. So it's pretty much spot on with what we're expecting. The Arabic, yeah, I do full reports in Arabic. It is an Arabic company, so that is the language they speak. When I was there for a week. Most people speak English, but it's honestly a great language. Great language, and it reads left to right as well, not right to left. So it reads like this. Sorry, right to left, not left to right. Yeah. So it reads from this side to this side, this side to this side. But yeah, that's what I'm looking at here. Tap into this, tap into this. I'm going to put an alert on these. Not a close above, sorry. Oh. Yeah, so real simple, real simple. Let's go back to, I don't want blanks, we want liquid only. Yeah, so 15-minute. Notice how it's not closing out above that. Not yet, anyway. Euro's still trying to look for it. GU. Interesting one. 4 minutes. I reckon we're going to reject away. Personally, but we'll see. We shall see. We have an alert on that, so we'll find out. What's everyone else's views on GU? I mean, look, this is a real simple way of just deciding, without even looking at gaps or anything. Where did it start? Down here. Where's it going? Here. Okay, is that up or down? It's up. Cool. Well, expect it to keep going up. And if it comes down, let's say down into here, everyone goes, oh my god, it's selling. Till it makes a clear gap to the downside, just expect it to keep going up. Look at the principle of the gaps that I was showing you guys earlier. Daily time frame, so vast amounts of time. Creates a gap, goes bullish for the whole time here. Creates a gap, goes bearish for this whole time here. Creates a gap, goes bullish for this whole move. Bearish. Okay, it goes bearish for a day. Then it makes a gap, goes bullish for this whole time. So the probability of you being correct for longer periods of time is so much higher. So much higher. Like, look at this. Bearish, yeah, you could have been wrong here, and you could have been wrong here, you could have been wrong here, you could have been wrong here. But it still sells majority of the time. Most of the time is spent selling. Here it's pretty much incorrect. You do get a down move, but maybe you spent 2 or 3 days not trading. So be it. Two minutes. Okay, let's see. Let's go down to the 5 minute, 1 minute. Interesting one. Here and here. Oh yeah. Nice. That's 100. Remember what we said earlier? This is the target. Why is it the target? It's a 4-hour high. Running for that target right now. You sure we didn't mark that, did we? Didn't mark this up either. 15. So AU and GU are the ones to watch right now. 1 minute 20. I'm actually long on EU right now. Yeah, nice. GU, sorry. Nice. Until we close out on here, though, you know, this could easily pull back in the next couple of seconds. So I'm cautious personally, but like I've always said, my decisions do not reflect the ones of my students. "30 seconds. 4, 3, 2, and 1. So we close out above it. Perfect. So this gives us now two options. You can trade like this off the 15-minute. Up into these highs. Or into just short-term highs. You know, it's completely down to you what you want to trade to. Or you can look for a more refined entry and base it off of a 1 minute to 5 minute. So if we see a pullback into this area, and trade off of that. Be aware that there is news in 2 hours and a bit. But it is 12 o'clock, so fortunately that is going to wrap it up for me as a trade has been given. So take note of this. Take note of what I'm looking at. If price action delivers higher from here, amazing. If it doesn't, it's unfortunate. But like I've always said, probability is always going to be the main thing you need to follow, not the want to win. Wanting to win is not going to define if something's going to work or not. But that is coming in some serious momentum now. The second it closed out from there, the momentum pickup is crazy. So thank you for everyone that joined. Appreciate you all. If you haven't already, hit that like button, subscribe button, join the Discord, check out all the links down below, and I'll catch you in tomorrow's live stream. Peace and love, guys. Have a great day. Catch you all tomorrow.